Welcome back to Investing Talk Podcast.
Great to be here.
Today, we're looking closely at Halliburton. You shared some recent information about the company,
That's right.
and our goal is really to unpack it all, extract the key insights, and help everyone understand what truly matters here.
Sounds good. And it's timely, too.
It really is. We've got earnings just around the corner, increased analyst attention, some, well, interesting trends in the oilfield services sector, too. So let's get started.
Okay. Well, first off, this is a pretty pivotal time to examine Halliburton, mostly because their first quarter 2025 earnings are scheduled for release on April 22nd.
Right, very soon.
Very soon. And the conference call that follows that release will give us essential context, for their financial performance and their future direction.
And people can find the press release first.
Yes, they should put out their initial earnings press release on their website beforehand. That'll give you a first look at the numbers, before the more detailed discussion on the call itself.
Okay, so let's unpack the significance of this. I mean, why is this particular report so important right now? What's the big deal?
Well, what's compelling here is really the context surrounding this earnings release. We've seen, a substantial increase in analyst coverage of Halliburton.
Oh, really? How much?
It's up about 53% compared to last year.
Wow. Okay. That's significant.
It is. And at the same time, we're seeing institutional buying in this first quarter reach its highest level in years.
So, but big money is moving in.
Seems that way. This combination, heightened scrutiny from analysts and significant investment from major players, it often signals a growing conviction in the company's potential. So that level of interest, well, it warrants close attention.
Right. So the big players are showing significantly more interest. That suggests they might be anticipating some potential gains, perhaps?
That's often the interpretation, yes.
So how is this, increasing optimism being reflected in the market's general view of Halliburton?
Yeah. Well, the prevailing sentiment around Halliburton does appear to be positive right now. Analysts are highlighting several factors driving this.
Like what?
Things like their robust cash flow, a strong balance sheet, anticipated opportunities for growth, and also their stated intentions to return capital to shareholders.
Okay, that makes sense.
So this upcoming earnings report, it really has the potential to either reinforce these positive views or, introduce new considerations based on the actual results and whatever guidance they give.
Okay. Now, for listeners who might be a bit less familiar with the energy sector itself, could you give us a quick overview of Halliburton's core business? What parts of the industry are they really in?
Absolutely. So Halliburton is a major player in the energy industry. Their operations are primarily structured around two main divisions.
Two divisions.
Yes, completion and production, and the other one is drilling and evaluation.
Okay.
And these divisions cover a really wide range of critical services. Think about essential processes like stimulation.
Stimulating the wells.
Right, helps improve the flow of oil and gas. And cementing, which is crucial for the well's structural integrity. Plus, they offer diverse drilling solutions to, efficiently access reserves.
So they cover quite a bit of the life cycle then.
They do. This two-pronged approach, completion and production, alongside drilling and evaluation, it gives them a pretty diversified revenue stream, allows them to capitalize on different phases, which is a key strength in what can be a very cyclical industry.
And I understand they're also pushing hard on new technologies. What's the focus there?
Yes, that's a really crucial element of their strategy. A strong focus on artificial intelligence, AI, innovation, specifically within the oil field.
AI in the oil field, how does that work?
Well, they're developing advanced AI tools. The goal is to make exploration and drilling processes significantly more efficient and ultimately more profitable.
Interesting.
And this early investment in AI, it gives them a potential edge over competitors because others are also moving towards automation and, focusing more on sustainability.
Right. So this AI push isn't just a Halliburton thing, is it? It fits into a bigger picture.
Oh, definitely. If you connect us to the broader industry trends, you'll see the entire oil field services sector is increasingly focused on, enhancing efficiency and becoming more environmentally responsible.
Okay.
So Halliburton's proactive adoption of AI here really positions them quite advantageously within this evolving landscape.
Now let's talk about the stock itself for a moment. What kind of price action have we seen with Halliburton recently? Has it been moving much?
Looking at recent trading, Halliburton stock has shown some volatility. Just over the past month, it's been trading roughly between, let's say, $21.10 and $21.92.
Okay, bit choppy in the short term. What about longer term?
Well, looking back over a longer, say, 6-month period, the stock has actually experienced a more pronounced decline.
Oh,
Yeah, it seems to be part of a trend that maybe started back in the second quarter of 2024. The overall decrease is around 44.25%.
44%. Wow, that's quite a drop.
It is. This longer-term downward trend might reflect, broader industry pressures or perhaps concerns about declining oil prices during that specific time frame.
Hmm. That longer-term dip is certainly something to note. But you mentioned earlier they have a strong balance sheet. Can you give us a snapshot of their overall financial health right now?
Right. While the most recent specific debt figures weren't readily available in the info you shared, Halliburton is generally recognized for maintaining a pretty solid financial foundation.
Okay.
In terms of their overall financial performance, looking at trailing 12-month figures,
Hmm.
so the past year their revenue is around $22.16 billion.
Okay, and how does that compare?
That's actually a slight decrease from the $22.94 billion reported in 2024.
Oh,
And similarly, their net income is approximately $2.42 billion, which is also down slightly from $2.5 billion in 2024,
got it. And earnings per share.
around $2.73. But it's important to note, despite these minor reductions, the prevailing opinion among analysts still seems to indicate future potential.
Okay, so it sounds like a bit of a mixed picture then. Strong underlying financials, solid balance sheet, but some recent, albeit slight, dips in key metrics like revenue and net income.
That's a fair assessment.
So what would you pinpoint as Halliburton's main strengths right now? And maybe what are some potential, let's say, warning signs investors should keep in mind?
Okay, strengths first.
Mm.
Definitely their innovation in AI for oil field services. That's huge. Combined with their substantial cash flow and, as we mentioned, that robust balance sheet, those are significant strengths that could really fuel future growth.
Right.
On the flip side, the stock's recent volatility, that choppiness we talked about, and those slight declines in revenue and net income recently, those are factors investors should definitely monitor closely. Keep an eye on them.
And how does Halliburton stack up against its main competitors?
Hmm.
Who are they really up against in this space?
Well, it's definitely a competitive environment. Key competitors include companies like Schlumberger, Baker Hughes, and also Next-Tier Oilfield Solutions.
Big names.
Big names, yes. So while Halliburton commands a significant market share, they're certainly not alone. And that commitment to AI innovation we discussed, that's a crucial way they're trying to differentiate themselves.
Set themselves apart from the pack.
Exactly, in that competitive landscape.
Looking ahead then, what are some of the critical factors, the potential catalysts that could really influence Halliburton's performance in the near term? What should we be watching for?
Well, number one, without a doubt, is that upcoming first quarter 2025 earnings report on April 22nd. That's the big one to watch very closely.
What specifically about it?
The actual financial results they announce, obviously, but also their outlook and guidance for the rest of the year. That will be pivotal in shaping market sentiment.
Okay. Anything else?
Furthermore, that broader industry push we mentioned towards greater efficiency, more environmentally sound operations, that trend actually aligns quite well with Halliburton's AI-driven strategy.
So that could be a tailwind for them.
It could be. Of course, you always have to consider the ever-present influence of, well, fluctuating oil prices. That's just part of the sector.
Always a factor.
Always. And the potential for regulatory changes within the energy sector. Those remain significant factors, potential risks for the entire industry, not just Halliburton.
Understood. What about the longer view? Even with those oil price swings, what do the long-term prospects look like for Halliburton? Thinking about growth and shareholder returns.
Despite those inevitable near-term uncertainties, oil prices going up and down, the long-term growth prospects for Halliburton appear to be, well, on a pretty solid foundation.
Why is that?
Their strong ability to generate cash flow is key. It enables them to invest back into their business, into that technology. And importantly for investors, they've indicated their intention to return over half of their free cash flow to shareholders every year.
How would they do that?
Through both dividend payments and stock repurchase programs, or buybacks.
Okay, that shareholder return aspect is definitely attractive. You touched on some key financial metrics earlier. Could we maybe dig just a little deeper into some of those figures? What do they tell us?
Let's do that. So in 2023, their revenue was roughly $22.94 billion. Projections suggested maybe a slight dip in 2024, which seems to have happened based on the trailing numbers.
Right.
But there's an expectation for a potential increase again, maybe to around $23.47 billion by 2027. And it's worth noting they had strong revenue growth between 2020 and 2023.
Okay, so a recent dip, but potential for recovery. What about earnings?
Analyst estimates for their earnings per share, their EPS, are also positive looking forward. Expectations of growth from about $2.68 in 2025 up to around $3.66 by 2029.
Decent growth trajectory there.
Seems like it. And while a specific current price-to-earnings ratio wasn't immediately available, the sense is that it's generally in line with or perhaps slightly below the average for the oilfield services industry.
Okay. And debt levels.
Encouragingly, their debt levels have been trending downwards, they've made progress there, and they've significantly reduced their interest expenses as a result.
That helps the bottom line.
Absolutely. And one more thing. Their return on equity, ROE, seems strong compared to peers, which basically indicates they're effectively generating profit from shareholder investments. That's a positive sign.
So it really sounds like that focus on technology, the AI specifically, and expanding their global footprint are central to their whole strategy, doesn't it?
That's absolutely right. Halliburton's dedication to technological innovation, particularly AI, and their strategic pursuit of international expansion are key competitive advantages.
Helping them maybe offset challenges elsewhere.
Potentially, yes. It helps them navigate maybe some challenges they might encounter in, say, domestic North American markets at times. Plus, they have that well-established brand recognition and a clear emphasis on cost efficiency.
So, all told, they're a leader.
They are genuinely a leader in the global oilfield services market, supported by their size, their tech adoption, the sheer breadth of services they offer, and their significant global presence.
Okay. Finally then, stepping back a bit, what are some of the overarching risks, the kind of things investors should always keep in the back of their mind when looking at a company like Halliburton in this sector?
Well, beyond the inherent volatility of oil prices, which we've mentioned a few times and is always number one,
Can't escape that one.
can't escape it. Investors should also be aware of potential regulatory pressures, particularly related to environmental concerns, which are increasingly prominent.
Right, ESG factors.
Exactly. And while no recent major lawsuits or, say, tariff issues were specifically mentioned in the info you shared, those types of events are always potential risks within the energy sector that could impact operations and financial performance down the line.
Standard industry risks to be aware of.
Pretty much, yes.
So if our listeners want to stay informed, get the very latest, especially after that earnings release on April 22nd, where should they be looking? What are the best places?
Okay, for the most up-to-date information, particularly right after that April 22nd release, the best resources are, first, Halliburton's own investor relations website. That's arr.halliburton.com.
Okay.
Additionally, following reputable financial news outlets, the standard ones like Bloomberg, Reuters, CNBC, they'll provide expert analysis and commentary pretty quickly.
Makes sense.
And for the really detailed official filings, the quarterly reports, and so on, you can always access their submissions to the SEC through the ADGR database.
Got it. IUR.halliburton.com, major news outlets, and EDGR for the deep stuff.
That's the plan.
Okay, so to kind of bring it all together here,
Yeah.
you've painted a picture of a company with, well, strong underlying fundamentals, a definite forward-thinking approach to technology with that AI focus, and increasing market interest from analysts and institutions.
Right.
All leading up to what sounds like a potentially significant earnings report very soon.
Yeah.
The key insights seem to be Halliburton's innovative use of AI, their solid financial health, despite some, minor recent dips, and the real anticipation surrounding these upcoming earnings.
I think that sums it up well. It'll be very interesting to observe how the market responds to the actual figures they report, and just as importantly, their outlook for the rest of the year.
It really highlights that interplay, doesn't it, between company-specific strengths like their tech and these broader industry trends, efficiency, sustainability, plus the macroeconomic factors like oil prices.
It's a complex mix, definitely.
Well, we certainly encourage listeners to explore those investor relations materials and news reports after the 22nd for a deeper understanding themselves. Thanks for bringing all this information to our attention today.
My pleasure.
And for everyone listening, please subscribe, like, and comment if you found this overview helpful. We'll see you next time on Investing Talk Podcast.